All right, so we should be live. I am checking on the socials just to make sure if we have any guests pop in. I don't know for certain. All right, yep, we're showing us live. So, as you guys slowly start to populate in, please feel free to drop a um, drop a question if you have any questions regarding investing. And I'm talking about all the way from the beginning, from how do I even start investing, what really is investing, or yeah, I've been investing, I've been trading, I've been in the real estate space, I've been in the stock market space for a few years, but I'm really trying to expand and extend my portfolio. Drop any of those questions because between the two of us, I'm sure we'll be able to get those questions answered for you. So I'm dropping on Instagram right quick that we are live. Make sure I leave my link to my YouTube so that people can come and join us. Like I said, drop your questions, drop your comments, whatever it may be. And we're going to be getting started in just a second here. All right, let me pull this link and then divert my attention. So, for those of you who are not familiar with me, my name is Brian Street. Um, as some of you maybe have seen on some of the info that I dropped over the last 24 hours or so regarding today's session, I've been in the investment space for I've been in investment space for about 7 years, a little over 7 years. I've been in the financial education research space for a little over, what is this, so 2016, a little over 8 years. Been in the real estate development and investing space, commercial specifically, since 2022. So I've got a decent amount of experience, but I'm not a pro. I know how to get in, I know how to get your feet wet, I know how to get going in the right direction. But the gentleman that I'm going to bring on here in a bit, he has quite a bit more experience than I do. And he's going to be one of those individuals that can really help you scale to the next level if you already have tapped into the investment space, if you already have a little bit of experience in the investing space. So after I get this invite sent, I'm going to make sure to bring him forward. But like I said, guys, please go and drop your questions. If you have any questions, drop those now, and we'll be getting started. So, with that being said, just again, and just to kind of go back to the beginning just a little bit. 2018, I started my own company. I wanted to be able to partner with individuals, with organizations across the nation. Well, initially it started local and then across the nation, and eventually I went abroad to where I can help generate funds to go towards developing and sustaining programming specifically for that transitional age youth. So 17 to like 21 or so, help them successfully transition into life and have the mental empowerment component, have the financial literacy component, but also help them really understand how to bring those two together and create the life that they desire. I can't do it all by myself. I have to have individuals who've been there, done that before me to be able to come in and add to that which I can only maybe sprinkle on. So, without further ado, I'm going to bring this next gentleman in. He actually, I met him in 2018, if I'm not mistaken, and I remember he shared his story with us, and I'm listening to him. I'm like, dang, man, you did all that at that age when most of the individuals that I know that I grew up around, they didn't even have any type of knowledge around investing, around saving money like that. So, just real quick, he's got 20 years of experience as an entrepreneur, real estate investor, including house flipping, multifamily, restaurants, industrial land, storage, 5 years in the trading space. And one of the things we'll touch on is when people hear real estate, oftentimes they only think of like physical buildings, but there's so much more to real estate. So without further ado, I'm going to go ahead and bring in our guest for today, Chris Perkins. How's it going, man?
Hey man, pretty good. How about yourself?
Man, I'm doing well. It's actually a really beautiful day today. It started out a little nippy, but it feels quite great now. I got the doors open, the windows open, the sun's shining. But
Nice.
here we are, man. So before we get into some of the meat and potatoes, kind of share with the guests just a little elaboration on who you are and just kind of where your beginning started when it comes to the investment space.
Yeah, for sure. So I guess the beginning of my investment career was when I started my own restaurant. So, Warren Buffett always says like the best investment you'll ever make is in yourself, right? And I invested in myself at a young age. I was 20 when I started my restaurant, 21 by the time it actually opened, but I made the investment when I was 20. And so I had saved up money from working about 4 jobs through high school and stuff.
Mm.
And my dad was able to match the amount of money that I saved up to help me get this restaurant started. So when I invested in this restaurant, I was investing in the business and the real estate and land. So that's kind of where I got started. We worked out the numbers, and it turned out to be cheaper for me to get a mortgage on the property with zero money down and than it was to sign a 5-year lease. So it worked out, the numbers worked out about $2,000 a month cheaper for me to do that. So it only made sense for me to buy the building.
Oh yeah. So I want to go back, and I really want my audience to pay attention to his response when it comes to what I'm about to ask him. So you mentioned you worked 4 jobs throughout high school. So I don't know if you were just a kid that was not athletically prone, so you had the extra time, or you just went out and just did the extra work. You know what? Yes, I have athletics, yes, I have my extracurriculars, but I still got to make this money. I want you to speak on the mindset that either your parents instilled into you or that you just conjured up within yourself to be disciplined enough to work multiple jobs while in high school, but not just work multiple jobs, actually save the money. So tell us a little bit about that.
Yeah, I do have to thank my dad a lot for that. I had a great upbringing from my dad from about 12 years old on. So I wanted stuff, right? When I was a kid, I wanted a skateboard, I wanted a snowboard, I wanted a dirt bike. And he would get me the things that were necessary. I played hockey, Canadian cliche,
Right.
right? So I was like born to play hockey basically. And so I played hockey all growing up until I was about 15 and figured out like I'm not going to make a career out of this. It's time to like grow up a little bit. And I wanted a skateboard, I wanted a snowboard, I wanted nice jeans. And my dad's like, yeah, that's where I draw the line. The jeans that cover you, those are the ones you're getting. And I'm like, I don't want these ones though. So he kind of like gave me the drive to like, he's like, well, you can buy that with your own money if you want. So I was basically like begging my dad to work by the time I was 14. And by the time I turned 15, he was like, okay, fine, I'm convinced. But you're not going to be working all the time without saving some money. So if you're working, you can either pay rent in the house or you can put money into a mutual fund or into an investment of some sort. So I started putting $400 a month into an investment at 15 years old.
Goodness gracious. There's so much I can go into just on that in and of itself. Thankfully, I was in a position to where when my son was 13, I got him in the position to start investing in the stock market. But he didn't have a job already for one. He wasn't bringing in hundreds of dollars for two, and even if he was, he's pretty responsible young guy. But being able to save and put away that much on a consistent basis, I just don't see it happening. So the second part I wanted to mention for you parents out there, you don't have to necessarily be you don't have to be in the mindset of I'm going to use because I can't take it with me. You have to understand that put your kids in the mindset to where they understand the value of earning and how that money can take care of them in the future. And then in return for them being a good steward of their money, be willing to, if even if you can't match what they earn, be willing to put in something to help them on that journey as they get started. Now, I don't know if you care to share the amounts as far as how much you started with, but I kind of want to draw a comparison between you and myself when it comes to where we got started with how much we got started just to help people understand that it's not a one size fits all game.
Yeah, it's definitely not a one size fits all game. We got to keep in mind too that this was 2004. So the cost of things was drastically different back then. So like as far as dollars and cents go, I don't mind talking about that. And like I'm an open book when it comes to stuff like that, totally transparent. But you fast forwarded to today's money, it's going to be times 6 or 7 kind of thing, right? For somebody to get started doing the same thing.
Exactly.
Yeah.
So yeah, when it comes to me specifically, and we'll kind of go to my beginnings. My parents were both blue collar. The most successful people around them were accountants, and that's why my dad he pushed me to go to school and become an accountant. I was a four-sport athlete through high school, so I had no time for working, or I was gonna, suck in the classroom or suck on the field. But I stayed focused to where I realized I'm not going to repeat the same thing that my parents did. And one of the reasons was because they saw better in me and they pushed me to go for better. But I say that to say you don't have to necessarily come from the beginnings of someone that kind of puts you in the right position, because I didn't discover investing until 2017. So what's that? That's 7 years ago. I was like 30, 31 years old when I started investing. I really knew nothing about getting started. Nobody in my immediate family had ever been in the investment space. But one thing that I started to learn very quickly was you have to step outside of your immediate environment sometimes. You don't necessarily have to continue to stay connected to those quote unquote day ones, because my day ones would have kept me living the way I was living at day one had I not ventured out. So me myself, when I first got started, I actually tapped into the cryptocurrency space in 2017, right when it was about to hit 20,000. It didn't quite make it to 20,000 at that time, but Bitcoin specifically. I decided to get involved in that space, and I say, you know what? If I'm going to get involved in this whole cryptocurrency space, I've heard the stock market is kind of reliable, so I might want to get involved in that space as well. And the reason I mention this is like I started with less than $100. Like I just started to put in, 5, 10, 15, 20 here and there. And then I started to see how it grew over time. And it was only when, and this some people will laugh at this, it was only when I let my money just sit there for months. Didn't do a whole lot of extra putting in. And then I received an email. I was paid certain percentage in dividends. And I'm like, I haven't done anything. How is money still coming my way? So that's one of the things when it comes to investing. When you properly invest, you can sit back after a certain period of time. Money is going to continue to come your way, but you have to know where to put your money, how to be consistent with putting your money in certain places, and just understand that it's not about starting big, it's just about starting, period. So Chris, if you don't mind, so once you started that first or got started, invested in a restaurant, the real estate in that property, what was the next step like for you as far as expanding your portfolio?
Well, the next step was to make that one work, right?
Mm,
So we had taken over a business that had nobody going to it, and people are creatures of habit, right? So that business that I bought was doing $400 a day in sales.
mm,
And if you know anything about the restaurant business, that's not enough to turn the lights on.
right.
So I had to get people into that building. So basically, long story short, I went around, I didn't have any money left for advertising. I didn't have any money left for a sign on the building. We didn't have enough money for anything left. We needed to make money that month. And so, most restaurants, they're like, oh, it's 5 years to the black, basically, right? 5 years to profit kind of thing. And it's like, no, no, we have 1 month. And so the first month that we opened, $400 a day in sales is about $12,000 a month, $10,000 a month, give or take, right? The first month that we opened, we did $94,000 in sales. And so just basically getting that success right off the gate, that money was enough for me to order a sign and start, getting some advertising out there. But my theory was like, people are going to talk. It's a small town. So if we just get people in the building, make sure they're 1000% happy with everything that they had, then they'll tell people, they'll talk about it, and other people will come, and we won't have to have this huge advertising budget. So, and the restaurant was like in need of renovation as well. So I took over a restaurant with no money that was in need of renovations, which were going to cost, you know, $200,000 to $300,000 kind of thing. And like, I had nowhere even close to that amount of money.
Well, I for those who are watching, we're going to bring Chris on again in the future. We're going to dive deeper into certain segments of his experience, because I want to, being that I'm part of a commercial development property right now, or on project right now, the phases of bringing it back to life, the phases of bringing the first phase of opening, the second phase, so on and so forth. I want to be able to kind of talk to people on that for those who are just getting into the space to kind of understand the process, and at the same time understand something that you said just a minute ago that it really jumped out to me, because with my background being in the psychology space, your mindset when it comes to tackling certain obstacles or projects is huge. You mentioned how the typical mindset when it comes to a business and getting to profit is, okay, we got about 5 years before we're going to come out of the red. So, but you said no, we got 1 month. So just that mindset of, I need to do in a 1 month time frame that most people in their sane mind do within a 5 year time frame. How do you think just that shift in mindset and the following action and behavior, so on and so forth, led to you guys being able to draw in as much profit in that first month as you did?
Well, it was pressure. So I work well under pressure, and it's about knowing yourself. Like, I didn't know myself then. I just knew I had to do what I had to do to make it work. Right. And so I manually drove around for 3 weeks before the restaurant opened to like 200 different businesses and said, gave them a takeout menu and was like, this is who I am. This is where I came from. This is what I'm doing. We're opening December 2nd, 2004. So just told everybody, gave them a deadline, basically, like, we're opening December 2nd. I'm happy, to host you there and whatever. And I didn't realize it at the time, but, I put myself in their shoes now today. And it's like, if some 20-year-old kid showed up at my work and was like, hey, I'm opening a restaurant, they know I spent about $500,000 of money to get this place, right? Because everybody could know what it was for sale for on the real estate website. So it's like, this 20-year-old kid comes to me and says they're opening a restaurant. Like, I'm going to eat anyways. Of course I'll go there and try it out, right? Like, I'd have to be made of stone not to go try it out.
Right.
So it's like, I just went around to 200 people that not only were going to probably try it out, but also were going to say, like, dude, this 20-year-old kid showed up today and said he opened a restaurant. Like, you want to go try it?
Right. Man, so that's another lesson. So when it comes to the whole entrepreneurship space, and I put this in a post on Facebook sometime last week, something along the lines of, if you're afraid to talk to people on an everyday basis, talk to brand new strangers as if you've known them your entire life, you're probably not going to succeed as an entrepreneur. So you being able to go out there and speak about what it is that you have to offer to the masses, just like that, without having any type of intimidation, any type of holdback. So where did that come from, and how did you get the balls to be able to do that?
I think I didn't even think too much of it, right? I was just like, I'm going to talk to people about food, and I like food. Everybody else likes food. And, just when you asked me that question, when you were talking about it, I think I also got some of it from when I was a kid. I remember I wanted these Reebok pump shoes. I don't know if you remember those.
I remember those.
Yeah, I wanted a pair of those so bad. So I went out and I was like, I'm going to go mow lawns, right? I'll go mow lawns until I make enough money to buy these shoes. So I went around and went door to door with my lawnmower and said, hey, I can mow your lawn for $10 kind of thing, right? And I had to, my dad was all about business. He had a business as well. So he was like, well, you're going to pay me for the gas. You're going to have to rent the lawnmower, right? All these things.
I love it.
And so it's like $5 a day. It wasn't crazy. It was like $5 a day to rent the lawnmower and, however much the gas worked out to, depending on the day. But it taught me costs of things that are going to happen, right? And so, yeah, I guess I got that fear out of my mind, or it wasn't even a fear for me of just going up to the businesses and talking to people, because I went door to door trying to sell lawn care.
Yeah. So just to kind of tie a ribbon on that, or make a lesson of it, when you're in any type of entrepreneurial endeavor, you need to have something attached to it that you want. So I have to succeed at this if I want to accomplish this. So it's kind of like seeing the end
Yep.
before you even get started. And I use the analogy of hopping on a flight. Like you're not going to hop on an airplane and you don't know the exact destination. So what is your destination? What is going to be the end result of you doing launching this business, doing what you say you want to do?
Yep.
So appreciate that insight, man. So now I'm going to kind of mention some of the things that I've heard from individuals when it comes to getting into the investment space. Now, like I mentioned earlier, I started out investing with less than $100, and I've seen decent returns on a pretty consistent basis. When the market is crazy, I usually tend to see even better returns when I know what moves to make, and you'll be able to go deeper on that when it comes to the trading space. So, what's what's one of the pieces of feedback that you would give someone that says, "Well, I don't have enough money to start investing. Um, I only make X amount." Like, if you just get that excuse of like, "I don't have the money to start investing," what's something that you would give people, just to kind of get their wheels turning?
I would say that there's no, with technology today, that's not an excuse anymore, right? Because back when I started investing, it was different because there wasn't all these ETFs out there that were like a basket of funds. If people don't know what an ETF is, and it's an exchange traded fund that picks stocks for you. You don't have to even pick stocks, but not even that. You can buy fractional shares. So if you have $50 and the stock is worth $500, let's say, then you can buy 10% of a share, a tenth of a share for that $50. So there's not really an excuse for like, oh, I don't have enough money anymore. And like, there's a ton, if you want to invest in real estate, there's a ton of private, or sorry, publicly traded real estate funds. So if you want to invest in storage, you can research a storage real estate investment trust, a REIT, and you can invest in real estate through the stock market. You're still buying real estate.
Mm.
You're just buying it through a publicly traded liquid asset, which we can get into liquid and illiquid assets if you want, Brian. That's kind of like one of the things that I really like to draw a difference from the stock
Yeah.
market to physical real estate.
Yeah, definitely. I'll hit on a couple other things and then we'll dive deep into that area. So I,
Yeah.
I want you guys, as you're listening, to take notes, jot down these acronyms: REIT, IPO, ROI, all these acronyms, and start making you a little dictionary. Start making you a little word list of these are the things, the terminology I need to understand when it comes to getting into this investment space. Not necessarily understand them from the jump, but at least start to familiarize myself with them. So lots of people give me the excuse that I don't have money to invest in this, that, and the third. And then I see them traveling all over the place, just blowing money here, blowing money there. And it's just the shift in mindset on instant gratification versus delayed gratification when it comes to investing, holding, invest and hold. But then when it comes to the trading space, it's just a discipline of being willing to sit there and do the work on a consistent basis, learn it and then do it. Now, before you switch into the liquid and illiquid assets and such, kind of speak to the difference between hold or invest and hold, so long term investing, and your trading. Kind of speak to people on that, the benefits, and
Yep.
pros and cons in each.
Yep. So I always, whether you're trading or whether you're investing for a buy and hold long-term strategy, I always advise long-term minimum 5-year time horizon. And one of my philosophies, and this has gone through, I feel like in life, we go through this process of elimination, right? We try these different things as like, execute and iterate and repeat, basically, right?
Mm-hmm.
So it's like you try this thing and it's like you hit a wall. Oh, that's not going to work for me or my situation. You try something different and you pivot. So over the last 20 years, that's what this has been for me, is just an execute and iterate thing. And if people listening to this can do less iteration than I had to do, then it's a win, right?
Right.
And so basically what trading comes down to is managing risk, right? So when you place a trade in the stock market, what is it that you're risking? You're risking a loss of however much money you're putting on the table, right? And so you need to be able to emotionally manage that risk. The stock market is far more emotionally driven than a buy and hold single piece of real estate, right? So, the difference, I guess, is, or what you want to manage when you're trading is manage your risk, figure out the worst case scenario of the trade that you're placing. And if you're happy with the worst case scenario, then go ahead and place the trade. But if you are not, then don't do that. And one of my philosophies in trading is don't lose money.
Mm-hmm.
And the second rule is, if you forget rule number one, it's still don't lose money.
Yeah.
So it's like, you just have to really manage your risk. And if you want to look at the stock market like a casino, I don't look at it like that, but do your best to become the house instead of, being the gambler. There's a lot of gamblers out there, and you can be the house, but you don't have the cost of investment of owning a casino, basically, right?
Yeah. Yeah. And that's one of the things that I've heard from people who are just completely illiterate to the investing space, period, is instead of investing my money, I might as well go to the casino and gamble it.
Yeah.
And no, that's not the same. And it's sad. One of the individuals that made that statement to me had about 30,000 that she was sitting on. And I was like, you need to put at least a percentage of that into the stock market and just let it sit there. And, you can live off of it whenever you get to retirement age. And that was her statement. I might as well just go to the casino and gamble it away. And it's all gone now. Like it's all gone. So
Ugh.
yeah, literally it is all gone. But nothing but love for her. So on the mitigating risk side of things, so there's lots of organizations, there's lots of firms, of companies out there that will say, hey, you pay us X percentage a month or percentage a year or a week, and we'll put your money into certain funds. We'll do the trading for you. What is your opinion on starting with one of those types of companies before you even get, and I'm kind of leading in, before you even get familiarized with the whole trading and investing space? What is your opinion on getting started with one of those companies that manages it for you? Specifically, these ones that kind of pop up on the internet. Hey, we have this trading bots, yada, yada, yada.
I would say stay away. So, number one thing is, like, before you invest in the stock market, I feel you need to be able to manage your emotions.
Mm,
And if you are emotionally intelligent and can manage your emotions, then you need to start investing with a small amount of money that you are not emotionally attached to. And people always say, like, oh, don't invest money you can't afford to lose. But also, I don't fully agree with that, because I've invested money that I can't afford to lose as well. And once you get to a certain stage in life, it's very painful losing money, and very emotional losing money. It can cause a lot of problems within life, but you need to have an income or a plan in a worst case scenario where you can weather that storm and come out on the other side of it. Because the last thing you want to do is start selling an investment for a loss. So when people get started investing in the stock market, I always say just invest in the S&P 500. It's pretty docile. And if you invest in the S&P 500, which is the SPY, is the ETF, you will outperform 90% of institutional portfolio managers. If you're not happy outperforming 90% of institutional professional portfolio managers, then you need to kind of check yourself, right? Like,
right.
there's nothing wrong with those results.
So on that front, what do you say to the people that they hear the S&P 500 and they hear, it's been on this upward trend for however long, and everybody says it's so secure? What do you say to those people that say, well, I put my money into the S&P 500 and then the market crashed? So like it's not safe. Like what do you say to those people that see the downturns in the economy and that kind of sways them to not be as confident, in the investing space?
I would say it takes the right emotional approach in the first place. So I compare buying stocks, like Warren Buffett actually compares buying stocks to like buying groceries. Buy stocks
Mhm.
like you buy groceries. So he's like, you're buying the S&P 500 for instance, right? So you're buying 500 of the world's largest companies that can't go to zero. The S&P 500 cannot go to zero. There's always going to be some 500 companies that are the most valuable companies in the world. So if you go in
Exactly.
there with this mindset that it can't possibly go to zero, then you say you pay $500 for a share of the S&P 500 and it drops to $400 a share. That's an extreme scenario, very extreme scenario. Now you're being able to buy the same thing for $400 instead of $500. Think of it like a gift. Your thing just
Yes.
went on sale.
Yeah, I love that, and it's that's similar to the approach that I give. Whereas oftentimes I say when the market is down, when you see all this red, that's like the stock market being or having a Black Friday sale. So like
Yeah.
you know that these companies are going to go back up. You know that an Apple Watch is worth way more than whatever the discount is that you bought it at. So you buy it at that discounted rate, knowing that it's going to be more valuable in the future. It's the
Yeah.
same thing with the stock market. You know, and over throughout history, these companies have shown to be high value companies. Just because it took a dip, you're getting a deal. So buy
Yeah.
it while you're getting a deal. And on the same kind of wavelength, what do you say to those individuals? And I already know what direction you're going to go in, but you speak it to the audience, to those individuals that see, okay, this is the highest this stock or this whatever in the market has ever been. I gotta cash out because it's probably never going to go this high again. Like, speak to that.
It depends on your time horizon, I'll start with, right? If you're 60 years old, that's a
Mhm.
drastically different situation than if you're 25.
Yes.
Right? Your time horizon means a lot when it comes to this stuff. So please, take that into consideration. So it's all, I don't want to give too much generalized, feedback to people because I don't want people that are 60 to take it the same way that people at 25 are going to take it. Right.
Exactly.
So I would say it depends on the situation. It depends on your ability or how much of a percentage of your portfolio is. What I'll use is an example of an ETF and how they rebalance their portfolios. So, one thing that's in my mind is like Tesla stock has been on this massive run for the last, 3 months kind of thing, 4 months. So it's been on this massive run. What the ETFs do is it becomes a larger percent of their portfolio. When a single stock does a run like that, the percentage of their portfolio in that company rises. So they must trim out some of that stock in their portfolio, right? So I don't do that. If a stock is doing really well in my portfolio, I just do nothing at all. Like just hang out.
Same here.
There's no problem with just hanging out as long as I still believe in 20 years or in 10 years, this company is going to be worth more than it is today. And they're going to be able to produce more goods that, provide more value to people, innovate, all these things, right? There's so many aspects of it. But basically, if I believe in the long-term profitability of the company, I'm not going anywhere. The stock market's totally emotionally driven. I may not be buying more at that time, right? I will pile up some cash. And we can talk too about how you use cash on the sidelines to still make some very low risk returns.
Yeah, definitely. A lot of good information, man. And we definitely gonna have to have multiple future sessions. But let's go ahead and transition into the liquid versus illiquid investments. I guess kind of
Yep.
start with easier to understand for some people, and then transition to some of the more complex.
Yep. So I'll start with the real estate because it's an illiquid investment. Any real estate or private equity, just so everybody knows, is like a mom and pop shop that, let's say they are doing tire changes or something and they need an investment for a new car lift or something. And you put money into their business for them to buy a new car lift as an example. That's a private equity investment, right? It's illiquid. You're not going to be able to just press a button and sell off your piece of real estate, or press a button and sell off your piece of this private equity piece of this business that you have, right? So in real estate, the toughest thing that I found is when you need to sell something is exactly when you cannot sell something.
Yeah,
Those things
I've
just
noticed
tend
that.
to align.
I've noticed that. And just kind of stick on that one for a little bit. For those people who may be in the real estate investment space, so I've been helping manage a mixed use commercial project here locally for about a year and a half or so now. And there's lots of, I'm not going to say lots, but there's some individuals that don't understand the complexity and all the different parties included, and how you can't put a specific date that, hey, this project is going to be complete on this day. And just kind of the mindset of people kind of stuck in the waiting game. Yes, I've got money tied up over here. I'm looking for those returns to start kicking back, but they keep pushing the project back. So kind of speak to that and articulate why these things happen and why it's important to understand.
Oh, there's a multitude of reasons that these things happen. As you kind of alluded to, it can be, contractors not getting done previous jobs at the right time to move on to this job. It can be material delays. We've experienced that after COVID with the supply chain issues. It can be the management, and I'm not saying this about your project. I have projects on the go that it's the management's inability to execute, and they just don't do the things that need to be done. And so there is so many things to look after within a private real estate investment that I think most people that invest in those things don't take into consideration. They don't take into consideration the management's track record. They don't take into consideration the materials being delayed. For instance, I'll use one of my projects as an example. They said it was going to take 2.5 years to finish the project. I allowed 5 years mentally
Mhm.
and budgeted for 5 years. 7 years later, the project is still not started.
What?
Yeah, not
Wow.
started. So we have this piece of land that's just sitting there, and
Mm.
it's going to cost $18 million to build this building. And now the guy beside us, we got all the permits, all the development permits, everything in place, spent $1.2 million on all the permits and the drawings and everything like that. Put an ad up that said we were going to do this because that's required by the city, that you have to put an ad up that just basically says this is what we're building here, and then anybody that doesn't want that built there can refute it with the city. And the guy beside us that owned the land beside us was like, hey, that looks like a really good idea, I'm going to
Mm.
do that too. And he built
Mm.
exactly what we were going to build, but
Wow.
he executed it, and it is built and it is full.
Wow.
So people invest in an idea that may or may not come to fruition.
That's huge because for one, it's taking us back to the mention of don't be willing or don't invest what you're not willing or able to lose. Like that's part of that mindset that needs to be taken into consideration. But understanding that something that was initially anticipated for 2 years, what, almost 4x that time, still hasn't even been started. So understanding real estate, there's so much in, like you mentioned, understanding the various different complexities, but the track record of that managing group, because they cannot have had a really secure track record. So the results of what's going on right now can be, implications of, well, dang, I should have known this had I looked at what they've done or hadn't done before. And then at the same time, let's say the idea slightly is tweaked, and at the end of a, heck, at this point in time, a 10-year period, you actually get the development completed and it's even better than before. So like there's just a whirlwind of things that could happen. So going into the investment space, that's why some people, get a little fearful. But when you get yourself to a certain position to where, okay, the funds that I'm putting into this project aren't going to devastate me elsewhere in life, it kind of can be exciting because you know that, yes, this is tied up over here, but I still have faith in this project. And God willing, if it goes in the right direction, I'm going to be really thankful in the future. But you never will even experience that potential if you don't take that initial leap of faith. So, so go ahead and continue with the liquid versus
Illiquid.
illiquid. Yes.
Yeah. So, it's basically like this project's been 7 years. I wanted to cash out after 5, and my money's still tied up. I can't really sell it. I own a percentage of the land, right? So when you own a piece of real estate, let's say you own it 100% of it, it's still not an overnight sell. You put it up for sale, you get a realtor to come in, they look at it. Let's say in an amazing scenario, you get an offer the day it's put on the market, right? It's still going to take a month for that contract to go through, for everything to go through at the bank, for the financing to get approved, all of these things. It's going to take a month. That's your transaction time, right? When from the time the offer to the time you get the money in a best case scenario. But when you need to sell, that's never going to happen. I can tell you from right?
Yeah,
So
and that's one of the reasons why I have just been so focused on. I'm just going to put it over there and just let it do what it do,
yeah,
because you never know if you're going to be able to get it when you need it.
yeah, and it's got to be money that you can kind of forget about, right? Not
Hmm.
forget about, but not need for expenses and things like that. And so, just to further complicate things, when you're investing in a real estate project, like you're describing or like I was describing earlier, you're investing in a percentage. You don't even own the whole thing. You don't control
Right.
anything, right? So now it's even harder. So let's say, I'll give you the example of like you own 100% of the real estate, but let's say you only own a third of the real estate. Now you're pitching to someone, hey, you want to buy my 1/3 of this property out? You have no control. You have no, controlling votes. You have a vote, but it doesn't matter if everybody else votes against you.
Right.
So it's a tough sell.
Yeah, that's real. And
And
that's
like,
why it's so important to just deeply educate yourself on these processes.
I would say, as a beginner investor, the stock market is going to be by far your safest investment as long as you go through a process with someone or with yourself where you can start controlling your emotions, because the stock market is totally emotionally driven, right?
Hmm.
Imagine if you own a piece of property, that's the difference between illiquid and liquid. I'm still on that topic, right? Is like the stock market is priced every single second of every single day that it's open. Your piece of real estate is no different. Just imagine there was millions of people voting on the price of that piece of real estate. The price of it would do wild things too.
Hmm.
But there's not millions of people that care about that piece of land. So you're not seeing the price of it in real time every day, but it's doing the same thing as the stock market. Like if that piece of land was known by 100 million people and they were all voting on the price of it in the stock market, it would be fluctuating all day too. But you
Hmm.
don't see it in real time. So you're not emotional about it. You
Exactly.
just know that you bought this piece of property and you're hoping that it's worth more in the future. The problem with it is you can't buy more of that exact same piece of real estate if the price goes down.
That's true. That's
And it's
true.
very, very capital intensive. You can't buy more of it for $50.
Right.
Even if you can buy more real estate, you ain't gonna get it for $50.
That's so true. And just on that, we keep hearing the whole notion of controlling your emotions, controlling your emotions, controlling your emotions. Whether it's entrepreneurship or investing, you can't allow your emotions to get too deeply tied in. Whereas, yes, you want to be emotional enough to be willing to go and do the thing, but not so emotional to where you fall apart whenever things don't seem like they're going in the right direction. And when I think about the stock market, you know how they say buy, buy low, sell high, et cetera, et cetera. People's emotions sometimes jump too far to the forefront to where as soon as it goes low, they want to buy because they have that sticking in the back of their head, but they're like, but what if it keeps going lower and lower and lower, and I keep buying and losing and losing and losing? Kind of speak to the notion of dollar cost averaging,
Yeah.
if you don't mind, and how that can, if you're able to take the emotion out of it, how that can be a tool to help you continue to grow that that part of your portfolio.
Yeah, I can speak to this for sure. I'll use Tesla stock as an example. It's a huge portion of my portfolio, so I can speak to it, and it helped me control my emotions. And I won't say that I'm emotionless, right? I won't say I'm not built of stone. So, but using an extreme example like Tesla stock, it's very volatile, right? So I bought 100 shares of Tesla at its high point at like $400 a share in 2022, I believe, December of 2022. I bought 100 shares and that went down. The value of that investment went down, obviously, by about 75%.
I got a headache just hearing that.
So just think about that, right? Like it's 40 grand for 100 shares of Tesla at $400 a share, and the value of that 40 grand went down to $10,000.
Mm.
And all I had to do was click a button to sell,
Right.
and I would have just extinguished 30 grand from existence, right?
Mm. Right.
Just extinguish. I will never be able to make that money back. At least if I still own the stock, I believe in the longevity of the company. I believe in where they're going. I believe in their technology, their ability to innovate, all of these things, their ability to execute, which we talked about already. Like, look at Tesla's
Exactly.
execution of this, right?
Right.
Without an ad spend. They don't even spend money on ads. So I don't want to like be this to turn into a Tesla stock pitch, but basically what I did was I through options, and I don't want to get too complicated on this call, but through options, I sold puts. So I was able to actually get paid to promise to buy the stock at a cheaper price at a later date. And I don't want to get too tied into that, but basically I bought more and more and more and more shares. So let's say I bought 100 at $400 a share, and then I bought another 100 at $300 a share. So, and this isn't true. I'm just using this as an example because the math would be very complicated if I use the real numbers. But if I own 100 shares at 400 and 100 shares at $300 a share, now my cost is only $350 a share instead of $400 a share. So my break even point on the stock is $350 a share. Then it went to $200 a share. So then I buy more at $200 a share, which would bring my cost average somewhere in the neighborhood of $275 a share. See what I'm saying?
Now those people who are too emotionally driven, like, dude, you're losing money. Sell already. But that's
Yeah.
the whole notion. When you believe in the track record in the future, the longevity of that company, you know that you're getting a deal. They're just going through that rough patch that so many companies go through. And it's just so important to understand that and not be in a position to where you feel like I've got to sell off because I'm just too fearful of this company dropping. And we're not going to go. I don't know how deep you are in the crypto space. I got a couple other gentlemen I'm going to bring on to go a little bit deeper in the crypto space, but it makes me think about those meme coins where there something will just jump out there and all of a sudden, it's super popular. It has no track record. The people who put it out have no track record of success. Everybody wants to jump on it and then feel some sort of way when they lose all their money. That's
Yeah.
why you need to have trustworthy entities that you're investing in.
Yep, exactly. So just to finish my Tesla swoop here, I was going to comment when you posted that on Facebook too, and I just didn't have the time to articulate a really good comment with the graphic and everything that I wanted, but I basically bought all the way down. The cheapest shares I was able to buy, I put the rest of the capital that I had in when it was at 185.
Wow.
So the last shares I bought were at 185, and I watched them still go down to $100, 105, I think, or $108 a share, and just held on and just grip it, right? And so I was trying to just liquidate some other assets so that I could put that money in, and then it started to take off. So this is how, controlling your emotions, like putting yourself on the other side of the emotions, can do a really good thing. Through this period, I was very happy that the stock was cheaper. I was actually excited that it was cheaper. I was upset that I didn't have more liquid capital to put into it, right? So just fixing your brain so that it's like, I don't have any money to put into it. I'll do what it takes to make some money to put more money into this stock because it's such a good deal. It's 75% off. If you're going to the store and you're looking at, I don't know, a pair of shoes, and you're looking at this pair of shoes, they're $500. Every day you walk by these shoes, like, God damn, I really want those shoes. And then you go in, it's like 75% off. Now these shoes are only $100, $125 for this pair of shoes. You're buying that pair of shoes.
Right.
You're
Yeah,
not buying the shoes.
it's literally merging your consumer mindset with an investor mindset. Look at investing through your consumer lenses. If you know something of quality is on sale, you're going to buy it. So
Yeah.
that's no different than these stocks. So,
So though I can be
very right.
happy, though I can be happy about this, because I have some money invested in Tesla, I don't have as
Mhm.
much money. So when the thing was on its run like this, I'm like, oh no, I don't want it to keep going up like this right now.
Yeah, I know what you mean, man. I remember when Bitcoin did its thing, and I've always been I'm gonna put it in there and just leave it when it comes to anything cryptocurrency. So remember, that was my whole plan. But some things happened in life that I need to pull some of these funds out, deal with these things in life, and it was right after I pulled those funds out that Bitcoin started to right
Yeah.
after. That's just the way it happens when you need the funds and you can't get them out. Typically, the value isn't really increasing, but when you take the funds out, a lot of times that's when it feels like things go up. So,
Yep.
speak a bit about actually. I saw something in your notes that I wanted you to kind of elaborate on, but it's left my mind now. So, what are some things right now that you're doing, either with individuals, with companies, with small groups, that can kind of help them get from a certain place as an investor and scale to a different dimension? What are some of the things that you currently have going on that people can potentially connect with you on?
I got lots of stuff going on. I can teach people how to invest in stocks. I can teach people, mostly it's about teaching people the emotional control. And I can teach people that through a simulated trader so that people don't, depending on what level they're at, I don't want people to put real money in. So most of the time, I will refuse to teach people with real money until they're ready to get started. And I'll teach them with simulated trading
Hmm.
because there's not this emotion attached to it. And if you have that emotion attached to your money, it's like the plan is never going to work. You're going to punch
Exactly.
yourself in the face.
Right. I like that because whereas I help people get started trading, well, not trading, investing, it's with actual real money. I do a
Yep.
lot of financial literacy workshops to where I have this game. It's called Build Your Stacks, to where they can go in and actually, like, it's a simulation of trading, and it's like from commodities to anything within the banks or your certificate of deposit, like everything in the real world that they can play around with these teenagers. And then after we finish, they're all competitive, wanting to get the top spot, who was able to increase their net worth the most through their investing, their saving, so on and so forth. And then eventually at the end of the game, I'll let them know, like, look, that was all fun and games, but literally that's the way it works in real life. So
Yeah.
if you guys can look at how you just did that and start to apply that to real life, you can really set yourself up in the future.
Yep.
So I love that simulation idea, or that simulation approach, because it can really allow people to kind of wrap their mind around what they're doing without having to lose any money. So I'm going to, for everybody who is watching, I'm going to drop Chris's info in the chat, just for those who may not be currently connected with him, so that you can reach out to him and get a hold of that simulation. One of the things, and we'll kind of speak on this and then wrap up for today. Uh, so first question, when it comes to, because you're in Canada, I am
Yep.
here in the US. When it comes to investing stock market wise, what are some of the differences that you have to take into consideration when it comes to investing compared to US residents?
Well, I wish I could speak more to this, but I would say in Canada, we have what's called a TFSA. It started in 2009. People can contribute $7,000 per year to a TFSA. You can trade. Most people don't know because it's called a tax-free savings account. But you can take that tax-free savings account and invest it into US stocks. And all the money that you make within that tax-free savings account is tax-free, just like it said. So you pay the tax on the money before you put it into the tax-free savings account, but all the earnings that you make within it are tax-free. So for Canadians, that'd be the way to go.
Definitely. So, and I mentioned that for a reason, because I know we may have some people from Canada that are watching. You definitely want to reach out to Chris on that front, because he can teach you some of the ins and outs of taking full advantage of accounts like that. Now, when it comes to individuals that are here in the States and you're speaking or you're hearing Japanese whenever Chris speaks, you might want to reach out to me first and me help you kind of get your feet wet and then shift you over to Chris. And one of the things that I've done, and it's another reason why I asked you this question. So this is not a political podcast or live, but when we were waiting for the results of the U.S. election, November the 5th night, I'm sitting there and I got my keyboard ready. I got a contingency for if this happens and a contingency for if that happens. And when I saw things going in Donald Trump's favor, I said, okay, the stock market is about to go crazy. Let me put together this resource. Let me put together this web page. Let me put together these ebooks. And they were already, the components of them were already out there in my ecosystem. I just had to put them into that resource. And on social media, the night, probably around 11 something that night, I said, for all of my stock market people or all my investors, put your orders in tonight so that whenever the market opens in the morning and goes crazy, you get to ride that wave up. So many people missed out. But for those who actually pay attention, understand how the economy reacts and responds to certain types of presidential administrations and such, you understand when to put your money where. And so many people connected to me, you yourself as well, were able to highly benefit from that. So I just kind of wanted to put that out there because I put together a web page that kind of helps you get started. And you made a suggestion I need to add to that web page as well. That kind of helps people understand, okay, these are some of the areas you might want to look at when it comes to putting your money into the stock market. Here is a little free resource guide on the steps of getting started. And then here's a more in-depth ebook that I put together that gives you direct links of, hey, you can use this to set up an account if you only have X amount of money to put in. This is a nice platform if you want to put in larger sums of money. So take advantage of those resources, and I'll attach that to in the comment section as well. But yeah, anything that you want to throw out there that I can drop into our chat right now for people to reach out to you or reach out to something that you have to offer.
Yeah, so my website is abundanceassetmanagement.com.
All right.
And my email is chris@abundanceassetmanagement.com. And just to speak more on what you were saying earlier, Brian, about, investing through these tax havens and stuff. I know that you guys have tax havens in the States, like your Roth IRA, 401ks, things like that. So investing through those things can be hugely advantageous, obviously. But I also want to touch on the fact, as far as the retirement side goes, most people that retire at age 65 start planning for retirement at 40 years old.
Mm-hmm.
So if you're under 40 and you start planning now, you're going to be retired earlier. So if you don't want to work till you're 65 or 85, start planning now so that you don't have to do that. Get your money to work for you, right?
All right, Chris. So you're telling me that retirement isn't an age It's
Definitely
putting
not.
your money away.
Definitely not.
Yeah,
That's a whole nother conversation, but
right.
as you know, Brian, I haven't had a real job basically since 2012. So no, it's not an age.
Yeah, and that's just the sad reality of some of the communities that we live in. It's just ingrained. I have to do X, Y, and Z by 65, by whatever age they extend it to. If they extend it, I have to do everything by then, and that's when I can stop working and live in retirement. No, not really. Like if you start putting things together right now, I was actually interviewed on a news station back in 2022, I believe, and I mentioned how if you put $4 per day, which an average American at that time said that they spent on coffee, $4 a day for 365 days a year into the Roth IRA or into a Roth IRA from the age of 25 to 65, you have like 800 plus $1,000, probably over a million now that's
Yeah.
sitting there waiting for you. But if you wait until you're 50 and you put that same amount in, you may have like, a couple 100,000 in there waiting for you. But it's about the date that you start. Start as early as soon as possible. And it's one of the reasons why, as I mentioned at the top of the hour, is one of the reasons why I got my son in the investment space when he hit 13 years old. I want you to learn these principles so you can start now. Whereas I was 30, literally changed 31, I believe, change around the letters. He was 13, I was 31 when I started. So for the parents who are out there, you got children, specifically if you're here in the US, consider putting together a custodial account for your child. Set up Roth IRA, all the goods. If you need help with all these things, please reach out. If I can't give you the exact info, I got Chris here. I got other individuals in my network that can give you the specifics of getting all of those things set up so that you can have your child building wealth before they can even touch it. And
Yeah.
you can have it set up to where, okay, when they hit 18, when they hit 21, when they hit 25, depending on where you live, they'll have access to this. And then they can have access to a certain percentage at this point, a certain percentage at that point. But you have to start now. And the earlier you start, the better you set them up for their future.
Hey, Brian, I just want to stop you. I see they connect with Chris. Abundant. It's abundance with a
Abundance.
CE instead of a T.
Perfect. We're going to make that change right now.
Okay. And then with the email, same thing, except you also put assess.
I see
Yeah.
two additional S's.
Yeah.
Perfect. All right. We should be, let me close it and then bring it back up. All right. And I'll make sure to to drop it in the chat as well. Making sure
there. Now it's right. Just didn't want people to be like, oh God, I'm getting bounced
this
back.
dude website doesn't even work.
Yeah.
Yeah,
for sure.
So well first
we'll
and
have to do
foremost,
this again.
Yeah, like I said, we'll definitely do it again. But thank you for your time today. Got some decent feedback in the chat so far. I'm going to have this running on my YouTube, and the replay will be available on Facebook. But yeah, man, I look forward to doing more of these with you. And one of the things that you mentioned is the fact that you don't have to be wealthy to start investing. But if you start investing, you eventually can become wealthy. And it's all about just getting started, guys.
Yep.
So off that note, appreciate you again, man. And we shall see you soon. I'm going to send you backstage real quick, and I'm going to close out, and then I'll close out with you.
Sounds good. Thanks, man.
All right. All right, guys. So we we'll definitely be having Chris back on in the future. We're going to go deeper into some of those specific topics. Now, I want you guys to let us know what are some of those areas that you want us to go deeper in. What are some of the things that you want to make sure that you learn more of so that you can implement? We're here saying just get started. Well, you may want to get started, but don't have all the information that you need. That's why right down here at the bottom of the screen, you want to make sure that you hit up Chris. If you don't know Chris directly and you want me to kind of give or make an introduction, reach out to me directly first. Chris has been in the game quite a bit longer than I have, but both of us have our areas of expertise. Whereas he mentions the emotional component. My background being in psychology, I help people manage their emotions and emotionally regulate as it pertains to investing, being an entrepreneur, et cetera, et cetera. And we dig into some of those past traumatic issues that may cause you to not be as emotionally stable when it comes to making some of these moves. Uh, well, on that note, guys, that's going to be a wrap for today. Reach out to me, reach out to Chris. Don't hesitate. It's better to get started now and see the results later than continue to hope and wish that you had enough money to get started and never see the